Good morning and welcome to the Five with Fitz. I'm Keith Fitz-Gerald. Thanks for joining me. You know, it's a holiday shortened week and all three indices are in the green as I record this. I am not sure that's going to stay, but I'll take it. Once again, history shows very clearly that being invested in markets that may not be perfect beats waiting to invest in perfect markets. So anyway, here's my playbook today for a holiday shortened week. Number one, what's next? Well, here's a thought that'll throw many for a loop. Let me explain. Investors just are going to get caught off guard here, but none more so than the spreadsheet gang. Why? Because the S&P 500 is up 9% year to date, fine, but 12-month EPS estimates have risen 14%. Translation, stocks are less expensive than they were at the start of the year. Let that one sink in. Anyway, there's a graphic in the written version of Five with Fitz. Take a look. I think it'll be eye-opening. Now, the naysayers, of course, are having a meltdown. They can't. That's their way. So let them. You know, that's always the case. Yet the world's best companies, meaning those that make must-have products and services, names we talk about all the time, continue to print money, as do many of the investors who own them, including, I hope, you if you're reading or watching along with the Five with Fitz. All right, number two today, one to buy, one to sell, and a new fund that starts trading Thursday. The ever-brilliant Stuart Varney asked me back this morning ahead of today's opening bell for my take on what the first thing newly seated Fed Chair Warsh should do as the new Fed Chair. Now, my answer might surprise you as good old common sense, but hey, sometimes that's what you need, in my humble opinion. Now, also, there are two hot stocks reporting this week. One is a walk away, in my humble opinion, but the other is a great pullback candidate. So I'm watching carefully. Plus, rumor has it there's a new ETF that starts trading Thursday, less than 48 hours from now. I am super excited, as are lots of other people who tell me that's the case. So anyway, watch the video elsewhere on my channel. See what you think. Number three, speaking of Fed Chair, Warsh, he's between a rock and a hard place. Kevin Warsh was sworn in as Fed Chair on Friday, and meanwhile, Jerome, it's transitory Powell, continues to hang out in the back hallway. Here's the rub. Markets don't move on who walks into the Fed, but they very definitely do move when traders reprice the risk that comes with an unknown personality at the controls. Now, and that repricing is important because it doesn't tend to show up in your stock portfolio first. It shows up in Treasury yields, which is, of course, exactly where most investors are not looking right now. Yields control the cost of leverage in today's markets, something we've talked about many, many times. That leverage then gets amplified by passive investing, options, and single stock futures. That's the transmission mechanism. So if you put it another way, stocks are actually the last place the impact lands, but they're the first place people panic. So keep that in mind. Warsh's first FOMC meeting is June 16, 17, if my memory is correct. So, meanwhile, you want to watch yields very carefully because that's going to tell you what traders think about where he's going to go. All right, Keith's investing tip, invest in the companies making must-have products and services so dominant, so profitable, and so essential that it doesn't matter what the Fed does next or who's at the controls. It's a short list. And by the way, it's the right list. So, to a point I make a lot, buy the best, ignore the rest. And if you are tired of second guessing the markets and you're investing, I'll be here and I might have some perspective that helps. All right, number four, Ferrari just pulled a Jaguar. I mean, one of those things today when I saw this. Ferrari has just unveiled its first fully electric car called the Luce, or Luce, I don't know how they're pronouncing it, but anyway, I did a double take. I'm a gearhead and, you know, I've loved the Ferrari brand since as long as I've known about cars, but this one was designed by Johnny Ive, yeah, the Apple guy, Johnny Ive. So in a way, we probably have a good idea what Apple's EV would have looked like if they'd gone ahead to build one. Now, not surprisingly, shares of Ferrari have fallen about 6% before the ink was even dry on the press release. I have got to imagine that Enzo Ferrari is rolling over in his grave, but that's just me. Strikes me as Jaguar 2.0, and they risk alienating legions of Ferrari fans and one of the most powerful brands in the world, whether you own a Ferrari or not. All right, number five, Real estate. This could change everything. I don't make that statement lightly. Wells Fargo just agreed to write mortgages on 3D printed homes. Think about that again. 3D printed homes. Now, one of America's biggest banks just told the market officially on the record that houses built by a giant printer are real assets worth financing, which means their quality, they're going to last, et cetera, et cetera, et cetera, or the bank wouldn't put their money behind it. Now, Icon Company actually builds those houses, and their printer essentially replaces an entire construction crew. Faster, cheaper, less dependent on labor that's increasingly hard to find and afford. Now, interestingly, and in fact, Lennar, one of America's biggest home builders, already has skin in the game, which is intriguing to me. It's Keith's rule of the back page at work again. The company's venture arm invested in Icon directly, and they built the first 3D printed community in Texas. Now, what's interesting about that is a bigger one is already underway, which is wonderful considering how fast the first one sold out and how many millions of homes America needs. Now they're selling the printer itself. It's called the Titan model and is capable of building multi-story buildings. And they're selling it to developers for, get this, just about $900,000 a copy. Now, Wells Fargo will apparently finance that too. What's interesting to me is that orders are already running at twice the internal targets, if what I've heard is correct. So it might be time to buy not only a printer, but a home builder like Lennar, despite the real estate crisis or the ongoing valuation crisis or whatever it is you want to call happening to real estate these days. Anyway, bottom line today, learn to think like a hunter, not the hunted. Your portfolio will thank you. Now, as always, let's make it a great day. You got this, I promise. Thanks for watching, and I'll see you tomorrow. Cheers.